Hello and welcome to your weekly installment of the GoNoGo show here on Stock Charts TV. My name is Tyler Wood. I am a CMT charter holder, and I'm joined today, as always, by Alex Cole, our chief of charts. How are you doing, my friend?
I'm doing very well. I cannot believe that the end of the year is sneaking up on us. We've got Christmas and holidays to plan for and prepare for, and just happens like that.
Sneaky indeed. Our family is woefully behind the curve in terms of planning for any kind of hosting and Christmas presents and all of the rest of it. Hopefully, all of our viewers are able to take some time away from the markets and enjoy time with family and friends, and however you celebrate bringing in the new year. But Alex, as we do each week, let's talk about markets. Let's talk about trends in markets, starting with our highest level, that cross-asset heat map, just to get a sense of the environment that we are trading in. Talk to us about this heat map.
Absolutely. And you can see that we've got the same situation that we've had now for a couple of weeks. The trends are firmly in place. We can see the top two panels, the equity markets painting strong blue bars, the same with Treasury bond prices. And then, of course, commodities, which we've talked about, the last several weeks in a row, how we were seeing some chop and some uncertainty, certainly now seem to be in a no-go trend, although painting some weaker pink bars. Mm-hmm. And then the dollar in a no-go returned to the strong purple no-go bars over the last week or so.
Absolutely. A lot of analysts on the street stopping all forecasting about what is going to happen with the U.S. dollar. It's been a dangerous trap and hard to get right. Certainly, a lot of the macro data sets that folks look at have changed over the last 3 years. We don't see the same correlations, and it's nice to just know what is happening right now. And if that's the best that we can do as investors, that's a great spot to start. So let's dive into the chart of the S&P 500 with these heat maps. What we're doing is we're taking that trend algorithm, the model that we've built, and just looking at the colors away from all the price action, just to get an understanding of the landscape. But now, as we dive into the complete GoNoGo chart, we're looking at trend, momentum, volume, and volatility. And if this is a new rodeo for you with GoNoGo charts, the whole idea is to encapsulate all of the weight of the evidence, all of those brilliant indicators that were given to us over the last 60 years, and use them, but without cluttering our chart. We want to avoid that analysis paralysis. So, Alex, let's talk about the S&P 500. Yesterday, we had a strong, sharp sell-off in the last couple hours of the trading day. A lot of news anchors commenting on FedEx's forward earnings revision to the downside, pulling at least the Dow Jones Industrial Average lower, FedEx being a large component of those 20 stocks. But with the S&P 500, are we looking at this as any kind of damage to the upward trend? Are we seeing this as more of a pullback within what has been firmly established as a go trend?
Yeah, I mean, you can see we've had a nice strong move in this go trend now for a couple of months. And what's interesting is we noted that we have had 8 higher closes out of the last 9 before yesterday's sell-off. So a very, very strong move. So perhaps to be expected, a little bit of a pullback, some digestion of gains perhaps. And you can see that gives us a counter trend correction icon. Remember, that tells us that in the short term, prices may struggle to go higher. So we might see a little bit of a sideways consolidation or even a pullback against the trend. But nothing to suggest, Tyler, that the trend is going to change. We're seeing strong blue bars. Mm-hmm. Oscillator is still in positive territory. If we pull back further, we'll look to the oscillator panel to see if the oscillator finds support at the zero line, which we know it should in a healthy trend. But at the moment, momentum still positive at about 3 and strong blue go bars in the price panel.
You know, a lot of the traders that we talk to, they're always seeking, the framework. Do I want to be fading rallies or do I want to be buying dips? And so for a lot of them, using GoNoGo charts is just a way to establish that there is a trend. We're moving to the upside. And so when we have these pullbacks or consolidations within the otherwise upward trend motion, that's a great buying opportunity. And certainly when we see momentum stay elevated at those overbought extremes for multiple days, this is a great chance for the markets to kind of digest the rapid gains that we've seen, certainly over those last 8 daily higher closes, but also 8 weeks of weekly closing higher prices. So certainly a good time for the market to digest some gains. but also for investors to think about their trading strategy in sticking with a trend that's well established to the upside.
Yeah, and this is the weekly chart, Tyler, you just mentioned. Look at that run of weekly closes, all higher than the one before. This week, we're going to see where we end up, but we're just about at the same levels, maybe slightly higher as we were last week. But you can see where we are. We're at all-time highs, and this would be, even if we pulled back for a couple of weeks, this would be another higher high in this most recent Go trend.
Certainly. Yep. Higher than the 2021 peaks there. And we'll look to see if the Santa Claus rally shows up here next week and into the first few days of January. So, Alex, let's move on from the S&P 500. We were talking about rates all through this year. Certainly, the market seems to have reacted very positively to the commentary from Fed Chairman Jerome Powell last week. Perhaps even getting a little bit out over its skis, overextended, pricing in the potential for rate cuts next year. I think all that we know for certain is that the Fed is not planning to continue hiking right now. And I think in that context, talking to a lot of great global macro strategists, certainly 2024 doesn't look like a continuation of the hiking cycle. But we might not be out of the woods on this inflation narrative yet. Who knows what is in store for us in 2025 and beyond. But paying attention to what's actually happening in interest rates can give us a really good idea of headwinds or tailwinds for risk assets and for equities. So as we're looking at this daily chart of the TNX, Alex, I'm seeing strong no-go bars in a downward sloping trend. We've had some extreme oversold momentum readings, but back still in negative territory at a level 4. What really jumps off this chart to you?
Well, like you said, we can't know for sure what the Fed's going to do or how people will absorb that information. But what we do know is that we're in a no-go trend on rates. So we can take that for what it's worth. And
how helpful is that, right? Wage inflation, maybe it's stickier than we know. Maybe there's other things at play, anti-globalization and all of the conjecture. But what we know is we're in a no-go trend.
That's right. We're in a no-go trend. We've made a series of lower lows.
Yep.
We've had a sort of a small pullback against that trend, a correction upwards, but then now a string of purple no-go bars again, telling us that the trend is strong. The no-go trend is strong. Like you said, we haven't seen any divergence yet from the oscillator. Oscillator's making lower lows as price does, but now in negative territory on strong no-go bars. So, a no-go trend in rates, that's what we do know. Absolutely.
Let's pop that out to the weekly view as well and just see how far we've come in this no-go trend relative to the longer-term view.
Yeah, well, the weekly chart shows you how important this moment is. We've seen some uncertainty. We're seeing go fish bars and the oscillator broken down into negative territory. So that's, depending on the way you're thinking about it, good or bad, but that is a bad sign for the go trend that was just in place for rates. Perhaps a good sign if you're looking for that to alleviate some pressure on equities. But uncertainty in the weekly chart of rates, but you can see that we are back in that area of sideways movement. So we are no longer moving higher on rates on the weekly chart. You can see that there's some uncertainty and some negative momentum.
And certainly a lot of support, multiple tests at the bottom of that channel when we're looking on the weekly chart in terms of that next level for support and perhaps just stabilization for rates here at these higher levels.
Absolutely.
Excellent. Let's take a look at the commodities rel map. We've talked about the USCI. In fact, even before we get to the rel map, if you wanted to just throw up USCI, the commodities index as a whole, and just to take a look at the price action and the trend there, let's jump that out to a weekly basis, if you don't mind.
Absolutely.
Yeah.
So much sideways movement, so much chop, and it's really trying to find its feet, but it's struggling again. You can see the breakdown here through the zero line out of this max squeeze. We're going to have to see if this can hold on the weekly chart. You saw what was happening on the daily. So it'll be very interesting to see what happens here with commodities.
Absolutely. And now we can look at that commodities rel map and just take a look at the individual elements of the commodities index, how they're performing on a relative basis to the S&P 500. So when we are thinking about our asset allocation mix, we want to make sure that We're widely diversified, but certainly holding securities that are outperforming our benchmark. And so along this map, I'm seeing gold and I'm seeing steel. Is that right?
The SLX. So
SLX.
you're
Yep.
you're talking about very specific areas of the commodity markets, right? That are trying to lead commodities higher. So you can see how tenuous that is.
Absolutely. And a little peak of a weak go trend relative to the S&P 500 from the lumber area of the market. Excellent. Let's talk about what everybody's talking about, Alex. Let's pull up a chart of oil. A lot of chatter about perhaps the low being in for oil, and certainly it's conjecture at this point about whether or not we return to an upward sloping trend or reach out to new highs. But a lot of analysts that we spoke to this week looking at that December touch point as perhaps the low for oil, at least for now. And so on this daily basis, right now, all that I can see is a relief rally, right? We haven't broken above the zero line, no positive momentum. We have not placed a higher high in this downward sloping trend line. So still stuck in a series of lower highs and lower lows. Alex, what jumps off the chart here for you?
I think that's the really the whole point is that, people have, I've heard that as well, talking to people, that perhaps this is the low for oil in December. But, of course, if it is, then we'll see that at some point. But until we see some of those basics of trend identification, it would be hard to sort of guarantee that. And whether you're looking at a GoNoGo chart or not, we haven't seen a higher high yet. So that's that first sort of checkpoint for us in terms of identifying a trend. Are we seeing higher highs? And we're not, so this is at the moment we're putting in another lower high. We just had a lower low. So if we roll over from here, then certainly the no-go trend is going to continue. Now, if we apply the go-no-go filter to it, then we can see that this relief rally hasn't been enough to take go-no-go trend out of the no-go colors. We're still painting pink bars here, which of course is the weaker form of the no-go. And even perhaps more importantly, the oscillator remaining stuck at using that zero line as resistance. So you can see how once that no-go took hold, we keep testing that level from below and keep getting turned away. So at the moment, this looks like another lower high in a no-go trend. What would change our minds? Well, if the oscillator breaks into positive territory, of course, that would be the first of the bullish indications. And then, of course, we'd love to see the price move higher and then change color. So at the moment, though, no-go trend, oscillator testing the zero line from below.
You know what? I can't help with your crosshairs right there at today's closing price. The polarity principle just leaps off of a clean chart. And what I mean by polarity principle is back in July, we had resistance at this level for oil. Couldn't break through, finally did. And then we've come back down and retested that area multiple times. Now that we're below what had been an area of support, prior resistance became support. Now that we're below it, it's resistance again for us. And sure enough, price is pulling away and not able to break above that resistance area. Fascinating. Alex, let's turn our eye to a chart of gold. In our household, we don't buy too many fancy pieces of jewelry for the holidays, but I know for a lot of households, that's a very popular choice. What are we seeing in this chart of gold?
Gold's still trying to sort of forge higher. We've been talking ad nauseum about the implications of a significant move higher and what that would look like on a sort of a 13-year monthly chart. But even in the short term, there is a go trend in place. And right now we've put in a higher low and we're waiting to see if we can take the next steps, which would be to make a higher high. Not there yet. We've seen some sideways action, some price sort of volatility reduction as we've moved sideways there. And you can see what that's done down on the oscillator panel, really getting stuck at the zero line and the go-no-go squeeze building. We'll see if that reaches its max, and then we'll watch for the break, because if we were to break out of the squeeze back into positive territory, that may well give price the push it needs to try to make another attempt on a new high.
Absolutely. All of our momentum indicators, all the oscillators that you're familiar with, those are leading indicators, right? But by definition, trend identification is always a lagging indicator. So we're looking to that go-no-go oscillator panel for our first signal, and the volatility compression that we're seeing build in that amber squeeze is just the tug of war between buyers and sellers. And this is a very important point for gold. Look how, our price range has narrowed. We're getting smaller and smaller candles or bars as the momentum remains stagnated at a neutral zero reading. It doesn't mean that there isn't a lot of trading around these levels, but we don't have a clear control of either buyers or sellers. And so when that breaks, we'll watch for the direction of the break and trade responsibly in that direction. Alex, enough about commodities. Let's get into the equity markets here in the U.S. I want to start, before we get to the sector rel map, let's pull up a chart of the Russell 2000, the IWM. We've had a impressive rally here in 2023, but it's just been in the tail end of this year that small cap performance has really come in to join the fray. We talked a little bit last week about an everything rally as the year end was pushing everything higher, including areas of the market that had been underperforming through most of 2023. Here with the Russell 2000, we had weekly closing high last week. That was very significant. Talk to us about what you're seeing on this chart right now.
Yeah, I mean, it looks even sharper move almost than what we were seeing on the S&P. So it's really nice to see the smaller stocks taking part, because that's what was missing, right? That's what a lot of analysts were talking about, how they weren't really going to buy into this rally in equities. While it was dominated by the mega cap stocks. And then now we are seeing, that everything rally that you're talking about, certainly to more of an extent.
Mm-hmm. Now I would love for you to switch over to that sector rel map. Let's talk about the areas of the market under the hood that are performing. And we're going to look at them instead of on an absolute trend basis. We'll look at these relative to the S&P 500 benchmark. So each of the 11 sector spider ETFs, just as a comparison of what is leading the market higher as we are in this rising environment for the S&P 500. I see a lot more blue coming into this map than we have had prior in this year. Certainly technology still holding on, the XLK, as well as consumer discretionary, the XLY. Interestingly, communications having rolled over, but what a diverse set of industry groups within the communications sector, right? You've got newspapers, and you've also got Google, and so there's a lot of differentiation once we even get under the hood of these sectors. But I think the one that we want to talk about today is the XLF, the financial sector of the S&P 500. We're starting to see some of the cyclicals return to leadership positions, at least on this daily basis. XLF Financials, XLI Industrials, and oddly enough, even materials, the XLB sector ETF outperforming a rising S&P 500. Of course, real estate has been on fire, and we've seen some great signs from the home builders, and we're going to talk a little bit here when we get under the hood of the XLF. So as we do with GoNoGo charts, we take a look at the asset classes, we'll get to the sector groups, and then we can take it another step further. So within each sector of the S&P 500, we've got the industry groups, and we can see where the relative leadership and laggards are for the industry groups within the XLF. Of course, a lot of people think, financials, that's banks, and banks are dangerous, and banks are under a lot of pressure. But we know that there's a lot of diversity within the XLF. We have seen banks rally in this last few sessions. But when I look at this heat map, it's a few other areas, right? Financial administration, the DJU SFA. When we're looking at the DJU SAG, that's the asset managers division within the financials, and look at that pulling into a strong go trend again in that fifth panel from the top. That's the asset managers, and so for our next step in the process, we're going to screen through a lot of the holdings within that industry group, and we can look at some plain old GoNoGo charts to get an idea of those trends. So, Alex, why don't we pull up WULF is the ticker, WULF. This is a carbon neutral Bitcoin mining company. So when you were thinking about holding the financial sector, we're getting exposure to a lot of different themes that are happening in the industry. Talk to us a little bit about this chart, Alex.
Yeah, this is a beauty. I mean, you can see how cleanly everything is doing what it's supposed to do in terms of strong trends being supported by the oscillator, whether above or below zero. You can see we had a relatively long 3 or 4 month move down, and then the oscillator stayed at or below zero. You can see here at the very end of that move, we had a max go-no-go squeeze that was broken in the direction of the trend back into negative territory, and that led us to one more lower low. And then the next time we rose to test the zero line, we see a squeeze build, this time broken in the other direction against the no-go trend. And then that really tells us that the no-go trend is really being threatened. And of course, go-no-go trend itself then started to paint go bars. And now the reverse is true. Now we're in a go trend. On every pullback, the oscillator then looking for support at the zero line. We've just made another higher high. Oscillators at 3, so in positive territory, momentum confirming the trend. So we're in good shape here when we're talking about WULF.
It's kind of a perfect illustration of everything that we want to teach about technical analysis. Right? We're identifying trend. We're identifying divergence in our momentum oscillators. And then we've talked about volatility compression, either as a trend continuation moment or a trend reversal. And it's all wrapped up in this single daily chart for TeraWulf Incorporated. What I'm seeing right now, Alex, is that we broke out of that second squeeze. We reverted back to a go trend condition, and then volume picked up. That's where the oscillator line moves from green to that dark blue, then finding support at zero. Really healthy conditions, very constructive for this trend in TeraWulf. Let's move on to another one. ASA is the ticker symbol. This is another small cap. TeraWulf is a small cap company in the financials sector, and within that asset managers group of holdings, the industry group within the XLF. Here, we're talking about a gold and precious metals holding company. Talk to us a little bit more about how we would read this using GoNoGo charts.
Maybe not quite so clean, but what you're looking at here is a similar situation coming out of a no-go trend. A little more uncertainty, a little bit more sort of violent swings in terms of price action itself, and some of those causing the oscillator to go on the other side of zero as what you'd expect given the trend that it's in. But now that we've settled into the go trend, you can see we had a strong run higher, string of blue bars, and then a pullback, counter trend correction arrow telling us that in the short term we may pull back against the trend. And then, of course, we look to the zero line and whether or not the oscillator finds support. Similar in terms of what we were talking about on the last chart as well. And we've seen this squeeze build, and it was broken in the direction of the trend, and volume is heavy. So we're really able to say that momentum is resurgent in the direction of the underlying trend when this happens. And of course, the underlying trend is a go. So we say we're seeing go trend continuation as price tries to make a higher high.
Absolutely. And that's a couple of small cap examples. Let's take a look at what's happening in the large caps. Why don't we pull up Blackstone Group? BX is the ticker symbol. Also within the asset managers industry group within the XLF, right? So the industry group that's outperforming the sector, which is outperforming the benchmark. And here are the companies that are leading that industry group higher. Talk to us again, Alex. How do we use GoNoGo charts to our advantage?
Yeah, very similar. We saw the go trend take shape here. We saw it pull back on the weakness here that's represented by the aqua bars. And then, of course, the oscillator falls to zero and finds support on heavy volume. But I think, too, this one, if you pull this out to the weekly chart, you can sort of get a sense of how sort of strong that break above this long-term downward sloping trend line here. If you imagine a trend line here, you can see that break, and you can just see the size of the squeeze that came in at the end of that trend as it failed to make a lower low and price action really moved sideways. You saw a massive go-no-go squeeze build up that was broken into positive territory. And sort of that set the wheels in motion really for several higher highs and higher lows. And of course, the tail end of that is what we were seeing on the daily chart.
And Alex, in terms of upside resistance, we're coming back to test those October 21 highs right about now, aren't we?
Absolutely. We've got maybe a little bit of room before we get there, but we're getting pretty close. So we'll look for that on the daily chart as well and see if there's any kind of correction against those highs.
Absolutely. As always, for all of our viewers, thank you so much for tuning in. Hopefully, some of these concepts are helpful in your own trading discipline. If you're a GoNoGo charts user, thank you so much, and please feel free to give a shout to Alex and I. We're on all of the social media channels, but you can also shoot us an email, info@gonogocharts.com. Really appreciate everybody tuning in each week. And next week, December 28th, Thursday, we'll be back with one more final show of this year. We'll do some very long-term charts, and we'll take a look at where the trends are across all the asset classes, the sector groups, and the indices. And we'll be trading with you every week, all through next year. So until then, take care of each other, enjoy time with your families, and trade them well.